Hey, good to have you back. Trump's big beautiful bill is now officially law, and it's already creating waves. If you're trying to separate fact from fiction, figure out what's actually changed, and most importantly, understand what key dates you need to watch out for, you're in the right place. This new law is packed with major changes, and knowing exactly when different parts take effect or expire can completely change how you manage your taxes, healthcare, or even your retirement plans. And yes, there's one pretty big change that won't kick in until after the next election, so you know there's a little political strategy built in too. So let's break it all down together. And before we dive deeper, if you've got thoughts on how this bill might impact you, drop them in the comments. I read every single one. And if this kind of clear explanation helps you feel a bit more confident about your finances and your future, please hit subscribe. It really helps the channel. Let's start with what's happening now. The big beautiful bill, officially called H.R. 1, was signed into law on July the 4th, a big announcement on a symbolic date. But here's the thing, not all parts of it started on that day. Some provisions took effect earlier in the year, and others won't begin until 2026 or even later. Let's begin with taxes, since that's where most people are noticing the first real impact. If you work in fields like hospitality, construction, service, any job where tips or overtime are a big part of your income, 2025 might be the first year you see a real break. Starting with your 2025 tax return, which you'll file in 2026, you can deduct up to $25,000 in tip income and up to $2,500 in overtime pay. But this only applies if you make under $150,000 as an individual or $300,000 as a couple. It's also temporary. This deduction runs through the 2028 tax year. So you've got 4 tax seasons to take advantage of it, unless Congress decides to extend it again. Definitely something to monitor. Here's something a lot of people miss. This deduction won't happen automatically. You'll still need to carefully track and clearly report your tip and overtime earnings. If you've been used to estimating or not keeping close records, now's the time to tighten that up. Now let's talk about a big change for seniors, because this one matters. Starting in 2025, anyone 65 or older will get an additional $6,000 deduction on top of the standard one. It's not replacing anything, it stacks right on top. And it doesn't matter if you're retired, working part-time, or living off savings. As long as you're 65 plus, you qualify. This extra deduction also lasts through 2028. Now here's where it gets even more interesting. The bill changes how Social Security benefits are taxed, but not for everyone. If you're a senior earning under $75,000, the new deductions might mean you won't owe any federal income tax on your Social Security benefits, but it depends on your overall income picture. This change kicks in starting in 2025. Now, if you're already not paying tax on Social Security because your income is very low, you probably won't see a change. And if you earn more than the threshold, the old tax rules still apply. So it's not across the board. But if you're in that middle income bracket, this could mean saving hundreds or even thousands of dollars a year. Now let's shift gears to something that hasn't gotten much attention yet, but could have major long-term consequences. Medicaid. Starting January 1st, 2027, adults between ages 19 and 64 on Medicaid will need to show they're working at least 80 hours per month to keep their coverage. There are some exceptions. If you're disabled, a student, or taking care of a child under 13. But for most people, this means more paperwork and new requirements. Also, federal funding for Medicaid will begin shrinking in 2028. That means states will have to cover more of the costs, and depending on where you live, coverage might get harder to qualify for or even reduced. This is one of those things people tend to push off thinking, that's years away. But if you or someone you care about relies on Medicaid, it's smart to start planning now. Talk to a benefits advisor. Stay ahead of it. Same goes for SNAP, food assistance. New work requirements begin as soon as 2025, and the age limit goes up to 64. The exemption for parents now only applies to those with children under 14. And if states are mismanaging SNAP payments, they'll start facing financial penalties starting in 2028. So it's not just individual recipients seeing changes. States are being pushed to get stricter too. Now let's talk about the child tax credit. This is a pretty straightforward one. Beginning in 2025, the credit increases to $2,200 per child. And from 2026 onward, it'll adjust for inflation. That means it should better keep up with rising living costs. You won't need to itemize to claim it either. Great news for families feeling stretched. If you live in a high-tax state like California or New York, there's also a new SALT deduction cap to know about. Starting in 2025, the cap on deducting state and local taxes rises to $40,000. But for those earning over $500,000, that higher cap starts to phase out. Just a note, this increase is also temporary. The cap drops back down to $10,000 in 2030. Now here's a twist that caught a lot of people off guard. The bill actually cuts or phases out a number of clean energy incentives. So if you're planning to buy an electric vehicle and want to use the $7,500 federal tax credit, you'll need to do it before September 30, 2025. After that, it's gone. Same thing with solar panels, home batteries, and other energy efficiency upgrades. Those credits start phasing out in 2026. So if those upgrades were on your radar, sooner might be better than later. While all this is happening, the Social Security Administration is making some big internal changes too. Starting April 14, 2025, you'll need stronger ID verification to create or access an online SSA account. This is part of an effort to crack down on scams and identity fraud, especially those targeting older Americans. Later in 2025, SSA will begin piloting a new system that uses artificial intelligence to detect fraud and speed up claim reviews. Don't worry, final decisions will still be made by humans, but the AI will help streamline the process. By 2026, this system should expand even further. There's also an audit program launching next year that aims to identify underpayments and send out retroactive corrections. So if you were shorted in the past and didn't realize it, you might get a refund. Let's move to student loans. Starting July 1st, 2026, new federal borrowing caps will apply. Grad students will be limited to borrowing $100,000. Professional students, like law or med school, will be capped at $200,000. Parent Plus loans will be limited to $65,000. There's also a new repayment plan coming called the Repayment Assistance Plan. It's expected to replace the current patchwork of income-driven repayment options. Details are still being finalized, but if you're currently in school or planning to borrow soon, the timeline here really matters. Also, beginning in 2026, Colleges with large endowments will be hit with new taxes. Rates could go as high as 8%. That might not affect you directly, but it could influence how certain schools manage tuition, scholarships, or aid. One last big thing: federal budgets. Starting October 1st, 2025, nearly all federal departments will face a 3% budget cut. The only exceptions are Social Security and the Department of Defense. For everyone else, expect slower services, longer processing times, and maybe even smaller staff. At the same time, the Department of Homeland Security is getting a budget boost. Border enforcement is expanding. The wall is being extended, detention space is increasing, and customs technology is being upgraded. That part of the bill is already in motion. So what's the big picture? A lot of what's in the big beautiful bill is staggered. Some things start now. Others begin in 2025, 2026, or even 2027. And that delay, it's intentional. It gives people time to adapt, but it also pushes a lot of political heat beyond the 2026 midterm elections. That's why it's crucial to know not just what changed, but exactly when those changes matter for you. If you're feeling overwhelmed, don't worry. You don't need to memorize every single date, but just having a general sense of what's ahead, what's temporary, what's permanent, what affects you directly, puts you ahead of the curve. If you've got questions, or if there's a specific date or change you want broken down more, drop it in the comments and let me know. Which part of the big beautiful bill do you think will affect you or your family the most? And hey, if this helped make things a little clearer or helped you feel more prepared, hit that subscribe button. We've got a lot more to cover in the coming weeks, and I don't want you to miss a thing. Take care, and we'll talk soon. Let me know if you want this split into chunks for voiceover or formatted for subtitles.